See, now you don't got to be nervous, Diana.
Yeah,
we're not live. So now we're just...
Welcome to Fix It and Flip It. The current real estate market is ripe for rehabbing. If you want to learn how to buy the right property at the right price and learn how to project and control costs, then you've come to the right place. Our host, Tony Raffin, is from the #1 RE/MAX team in southeastern Michigan. And Kevin McClellan is Mr. Flipper Extraordinaire. Now, let's welcome Tony and Kevin. This is Fix It and Flip It.
Yeah, I'm back,
Tony's
bitches.
back in the studio. Tanned up, looking good.
Oh, what a vacation, man.
Week
Nicest vacation I have ever gone on in my life. Bahamas. Mexico ain't got shit on the frickin' Bahamas. This place is off the charts. Food was fantastic. Weather, 85 degrees. Every day it said it was going to rain. You had some clouds here and there. Nothing. Finally, the day it did rain was the day we were out shopping and mall dropping and going downtown. It was so freaking cool.
Did you put on the vacation 10 pounds, or how'd you do diet-wise?
I ate like a pig and lost 2.5 pounds. Probably because I think we walked like 18,000 steps a day because going down to the pool. There's like 12 different pools. We stayed at the Baha Mar. That's where we did our live podcast with Samuel Moss, the 16-day
awesome.
survivor. One thing I didn't tell you guys last week, for those of you listening last week, he was stuck out in the ocean for 16 days. This was not the first time he was stuck out in the ocean. He got stuck 6 months earlier for 4 days. So he just called me yesterday. He says, I bought another boat, but I'm having it shipped to the Bahamas. I'm not going to get it. He goes, then you can go fishing with me. And then he started laughing. He goes, you won't go with me. I says, you're damn straight I'm not going with you. I don't want to be another news story.
So 4 days wasn't enough the first time. He wanted to go back for more, so he went
16 days
16.
stuck on the ocean.
Hopefully he's done getting stranded out on the ocean.
This guy's got drive and determination. He won't quit. All he wants to do is save his money and open up his own dive thing where he can take people out diving and conch fishing. And I mean, he's just excited about it. He's a guy. They don't make much money down there.
Yeah.
I mean, the average guy's making $210 a week. You know, I mean, the casinos are making the big money down there. They're the ones
There's
who came
casinos
in.
there?
Dude, Atlantis is over there.
Is there? Never been there.
Huge. Baha Mar cost $4.2 billion to build. The Bellagio only cost $1.2 billion to build. This place has got 3 hotels in it. It's got a Hyatt, it's got an SLS, and a Rosemont. I think there's like 12 swimming pools, 8 restaurants. It's a totally cashless place. So you can't spend your cash. You have to pay with a credit card or room charge. All the tips are included, so you don't tip. There's no tipping.
Yeah.
But the food is great. But when you go off hill, like you can go down to this place called Fish Fry. It's got all these little houses, and they're kind of like big houses, but look like little small restaurants. And everybody's got a different way they cook. We went and got some red snapper and some grouper and some beans and rice. It's their, and plantains. It's their traditional Bahamian meal. The people in the Bahamas are the most incredible, friendly, wonderful people that you could even ever imagine. I ain't got nothing bad to say about anybody. Taxi cab drivers, restaurateurs, maids in the hotel room. They come in, they treat you like a king and queen. So, and our special guest today.
Before we go any farther, let's introduce is the word I was looking for. Our special guest, Diana Sloan from Churco and Visionary Title Agency in St. Clair Shores. Diana is associated with Visionary RE/MAX. Tony does a ton of business with her agency, and I do as well on my deals, whether it's with Tony or if I find deals on my own, I call Diana. So welcome to the podcast, and thanks for coming in on
First time?
First time.
Wow.
First time.
Diana's just a wealth of knowledge when it comes to everything title. There's people go through the process of buying, selling a home. They see the stacks of paperwork, but they don't understand what all goes into it and what every document means, what title insurance is, title policy, who pays for it. So we got Diana here to kind of educate all of our viewers and listeners on all the ins and outs of the title work, because people just throw out the term title work, but I don't think they really know what it all entails, right?
No, they really don't.
So
there's a lot to it.
First question: what is a title insurance policy?
Well, a title insurance policy is ensuring the buyer that the person who they are buying it from actually had the right to sell it to them, and that there's no other liens, or if there are other liens, you're going to be aware of it, and that's going to be an exception to the policy. But our job is to basically research the property, determine who the owner is that has the outright right to sell it to you, and then we're ensuring that they had the right to sell it to you. Moving forward.
Is it a third party? Would Visionary Title insure that policy, or is it a third party company if there's an issue that arises a day later or a year later on this title, on this property that I bought? Who do I call if there's an issue?
Well, we are Visionary and Churco are agents, and we have 3 underwriters who are nationwide, and they're backing everything. So as an agent, we have to follow their guidelines, make sure we're protecting everybody involved. We issue the actual policy, but they, as a national company, are backing it.
They're the insurer of it. So
Correct.
basically, you're like a commission salesperson.
But yeah,
But you guys do your own
research.
Your research.
And we actually issue the policy and the title commitment. We issue first the commitment that shows you who the owner is, what liens are on the property, if the person selling it to you has a mortgage, if they're behind in property taxes, if they filed bankruptcy, if they have, state or federal tax liens owed. We research all that because that affects the property.
Okay.
So we make the determination who the owner is and what liens need to be paid in order to get the new purchaser clear title. So then they become the fee simple title holder, basically, which allows them to sell it to somebody else
down the road and not have any issues. And
correct.
Clear title, it's referred to as.
Because you don't want to, the bottom line is you don't want to trust that the person you're talking to that's telling you they own it.
So like you go to Craigslist and the guy says, yeah, I'll sell you the title. I'll sell you the house, but I'm selling it to you on a quit claim deed.
Mm-hmm.
So kind of give us a scenario here. What type of deeds do we have to worry about as investors?
Well, a quit claim deed is never good because of the fact that there's no guarantee. Like I could tell you, Tony, I own a house and I want to sell it to you for $50,000.
Right.
And I'm going to give it to you on a quit claim deed. And you say, okay, here's my $50,000. I sign over the deed. Maybe I don't own the house.
Turns out you may own an interest in the house, but there may be a lien on it for $100,000. There may be taxes owed on the property.
She might have inherited it.
She
There's
might have
there's
inherited
two
it,
other
yeah.
heirs that each own a third. So where it comes, right? People, first of all, let's clear up one thing for our listeners and viewers is it's a quit, Q-U-I-T claim, not a quick. So many people think it's quick because it happens very quick.
Yeah.
It's a one simple form. It's like, oh my gosh, I just bought a house with this simple form, like one page that I notarize and go turn in. Now I own. People don't realize how simple it can be, but it's a quit. Diana, if she's selling me the property, is quitting her interest, right? Or her ownership. You're quitting your ownership.
Whether I have an ownership or not.
Right.
Because
there's no guarantee with a quit. So that's kind of when it comes down to the most risky or volatile, right? Like the quit claim is kind of like, I call you all the time and say, hey, I'm going to buy this property. I think I'm going to buy it on a quick claim from this guy. He seems legit. You start freaking out and tell me, no, you're not. We're doing this,
she's
that,
looking
and
out. She's looking out
does.
for you.
She starts, you can just hear it in her voice. Like, are you sure? And I'm like, yeah, the guy seems legit. I can read him. I know if a guy's not legit or not, So the quick claim is there's certain times to use it, right?
Yes, there are scenarios that you can use a quick claim deed.
A family member, you know the history of the property.
Yeah, that they can be used. I mean, there's some concerns with that too from moving forward as far as insurance goes from our side of it, title insurance. But regardless, yes, there are scenarios. The warranty deed is the one that warrants the title. So if I deed you a property on a warranty deed and I sign that, I'm giving you my warranty that I owned it to give it to you.
And that warranty is backed by insurance, which is the title insurance policy.
Yes.
If that's paid for and you go through a reputable title company and not try to do this on your own, right?
Yeah, because the warranty deed you can go back and sue somebody on. So if I give you a warranty deed and I didn't have the right to sell it to you, like I had no interest whatsoever, you can go back and sue me, basically. And that's what we as a title company, we want that warranty deed so we can go back and sue somebody as well. If there's a situation that maybe something wasn't disclosed properly,
Correct.
and that person, there were other interests that we did not know about.
Like Kevin being an investor, one of the questions you always ask are, has any work been done on this property that has not been paid for in the last 120 days? Because it may be something that slips through the cracks. Because if a contractor liens a property because, Kevin, you're a deadbeat and you don't pay somebody, which not you.
Never happens.
Right. So you don't pay somebody, then all of a sudden this guy comes in with a lien later on. As of the date of that closing, that lien was never there. If something comes in after the fact, you're not responsible for that, but they also don't have the right to lien that property either once it's transferred ownership, correct?
The seller signs a form stating that they're
Yeah.
going to, in good faith, help to correct any omissions,
We
errors,
do
so on
have,
and so forth, correct?
I mean, we can only determine what's there, what's on public record. So if Kevin hired somebody to do a job on a house, and for whatever reason, he doesn't pay the guy, okay? And the guy goes in and files a claim of lien.
I could even pay the guy, and he could still go try
Yeah,
to put a lien.
it
Anybody can sue anybody. Anybody could put a lien on a
Right.
property. It's really the standard to do it isn't that high. So
No, you can
it
go
could
in
be,
and file anything,
yeah.
But
doesn't
it's
make
also
it legal.
illegal to cloud a
Yes.
title
Well,
improperly.
sure.
Without cause, you can't do
No,
that.
you cannot. You're right. It's illegal.
Right.
But in the case where let's say, that's why we have you, for example, sign, we call it our owner's affidavit, stating that you've paid all your contractors. So nobody has the legal right to come back and lien your property. But let's say somebody does.
Right.
And then you sell the property, we insure it to your new buyer, and then a lien pops up, 5 months later.
So what happens? Let's go through that process. Let's use a hypothetical of I guess was use me since I sell a lot of properties. I sell a property, a contractor pops up 5 months. You're getting a call from the person that I sold the property to saying,
I can't refinance the
I
property.
I went to refinance it, or I went to go sell it already, and there's a huge issue. There's
Yep.
a $10,000 lien.
Yeah.
Who gets involved? Who handles what? Where does the title insurance, does the title agency take care of the issue, or does the title insurance company? Who do you call? And the only reason I ask, it's funny that I didn't know Diana was coming on, until last minute today. I have a buddy that invests in Metro Detroit that lives out in California, and he started buying properties here. And literally about 5 days ago, he called me and said, he calls and always says, Kevin, I need to pick your brain. He's only been in the game about a year or two. I've been, flipping houses and buying houses for 7 years. So I get called and asked these questions all the time. And he literally has an issue. He bought a house in Clinton Township, went through a title company. Apparently somebody missed that the city had like $18,000 in like grass cutting, boarding, rodent. I don't know how that much was missed. I guess there was a ton of liens on the property. The county was owed a ton of back taxes, so the title company paid that. I guess thought they paid the other 18, or it just fell through the cracks. So I forgot how he got made aware of it. Oh, what it was he wanted to start doing work on the property. He went to the city to get permits in Clinton Township, and they said, we're not issuing you permits until we get our 18 grand. We're not. There's a stop work order on the house, and you can't do anything. And he's like, well, he just bought it 2 weeks ago. He's like, whoa. So he's like, do I call the title company, who he did, or he says, do I make a claim on my title insurance? What does he do in that situation?
Well, first I would call the title company and let them research it,
Right.
and make a determination what they did and steps they took to assure no items were there on the property. I mean, that's probably like a special assessment, I'm assuming, and so that's something that we call each city for the properties, and sometimes you have to talk to various departments at the city,
Right.
to get the proper answers. So we take all the precautions to assure those items are handled if there are any. But if we're not given the information or it's not posted properly, it puts us in a bad position, because if we don't know it's there, we don't know it's there. And if we're not told it's there and we do all our proper research and it still is an issue.
Do you guys have to call the city to make sure there's nothing there?
Yes, we do.
And if they don't post it,
Sometimes they don't. Sometimes there's like a transfer from one department to another that prevents us from having knowledge of it. That's why we go back to our affidavit that's signed by the owner, and that's part of that. And there's other forms that they are making a sworn statement, basically, that they don't have knowledge of anything that's outstanding on the property.
I have a hard time believing that the guy who sold your friend the property didn't know about $18,000 worth of lawn cutting and nooses.
Yeah, I mean, it sounds like the seller obviously walked away. He walked away with a check. I know that. Probably $18,000 heavy, too much.
Yeah.
So now does the title company, would you be calling that guy saying, hey, you need to come in and we need to set a date here soon and come in to have a chat?
There's various options. I mean, the last thing that any title company really wants is to have a claim on their policy because, of course, that's never a good thing.
Well, that looks bad, right? Who wants to keep insuring a title company?
It not only looks bad, but then eventually, I mean, we pay rates too. So anytime we have a claim, our rates, we have to be insured too. We have E&O insurance. So every time we have a claim, our rates potentially go up. So it's we're very, very careful whenever we need to file a claim now, and the underwriter backs that. Unless we, as the agent, have done something blatantly wrong and have not followed proper procedure, then we'll have to be responsible.
So let's say Kevin did something wrong and didn't tell you about that purposely, and you found it deceptive.
Yep.
You won't write another title policy for Kevin
No,
again, will
probably
you?
not. Probably not.
So,
and at that point, we're probably going to go to battle with Kevin legally.
Right.
Now,
and since the underwriter, let's say the underwriter you used was Fidelity, which is what they own probably 60% of the title work in the nation.
Yeah.
So under several different names. Fidelity sees Kevin's name there, knows they've already had a claim with him. So his chances of selling another property to somebody else using one of Fidelity's holding companies or Fidelity probably would be slim to none.
At some point, if it's discovered that this is something common that he does, then there will be like an email sent to all the agents under Fidelity saying, don't insure anything with Kevin's name on it.
Right.
So we do get
higher
those.
The risk. Nobody wants to deal with somebody at high
Correct.
risk if they have a
Right.
propensity to have an issue pop up on
Propensity.
their policy.
That's a great big word. That's a
I
good
can spell it too.
Can you spell it backwards like those kids on
Oh
Sunday
my
night?
gosh.
Can you believe it? Propensity. Why? I don't even want to think about it.
That was ridiculous.
And they do it in their head. Son of a gun.
So let me go back to my buddy's situation because it's a real
Yeah.
life situation happening right now.
Yeah.
Is the first step going to be to contact that seller and say, hey, we need a check back from you for 18 grand, so that way we can clear this
That's
up?
what we would most likely do.
And
we
now
would
if that
try
guy-
to rectify it first.
If that guy stonewalls you,
Then
which is he committing a crime? I mean, like
It all
he obviously has
depends,
money
you know?
he shouldn't have, right? It should have been
well,
paid.
that's a problem. Like if we contact that seller and say,
Are you
"Hey,
going to take legal action against the seller?
we could, yeah," and we've done it.
That's just your lawyers on staff that are going to determine that.
Yep. If
Because
they,
that's I mean 18. We're not talking.
That's a
18,
lot of money.
We're not talking $180 to where you guys probably just write a check and just
I mean,
chalk
it's
it up
a lot
as-
of variables, honestly, that go into it. I mean, we're insurance, so of course there's variables and different things.
The risk
that,
is still low.
So does the title insurance? My buddy was having a hard time kind of dealing with the title company. I won't say its name. It wasn't you guys, but they were kind of giving him the runaround, right? Like, 18 grand. Oh, I don't think we did anything wrong. We checked and we'll call you back in a couple days and no call back. So then what does he? Then what does he do?
Well,
At
he
what
could
point do you
file
make
a
a
claim.
claim? Yeah, at what point
At
do you
that
file a
point,
claim? Because that
if-
was his question to me: is do I get the title insurance company involved?
I would, without knowing all the
Yeah, we're talking
details,
hypotheticals.
but that would be my suggestion. If they can't work it out with the seller to get the seller to come up with this money that was owed,
Is there a time frame stated in the paperwork or policy that we get this rectified so he can move on and resell his property since he's an investor?
No, there's really no time.
That policy
time frame.
actually works for the life that you have the property under that policy.
Correct. It only the title insurance is different from like a homeowner's insurance because the title policy is insuring back.
Yes.
So it's everything happened up to the time you bought it.
Right.
So, but it doesn't move forward. But if something occurred prior to,
Right.
that's what we're covering. So in this case, I'm assuming, that work was done prior to him buying it.
Yep.
And that would be, to me, a claim. So what he would do is he would write a letter basically indicating he's filing a claim against his policy. And he would send that. He could either send it directly to the underwriter or to the agency, and then the agency would have to forward it. They would depending on the situation, whether they have to take it or send it off to the underwriter. If that title company did everything right and there was nothing that they could have done to prevent that, then it would go to the underwriter. They would defend it. So they would put their attorneys basically on to defend that buyer in that case to get that money one way or another.
And again, they're probably going to do the same thing. That the title company call the seller, say, "Hey, we need a check from you."
You're trying to do what you can first, to and hopefully
because the city ain't going away. They want their money.
Exactly, and that's going to hold everybody up until they get their money. Which so it's
and that was his thing. It was a weird scenario that I've never run into where a lien was missed, and he's an investor. He's going to do things right, permit everything on the property, and he's at a standstill now, and he's got holding cost and this that. You're going to miss selling season here if you get into getting the property done in August, September, October. The market takes a little dip, as we all know. This could cost him. This could cost him tens of thousands of dollars if he can't get permits and start going on his property.
It's an unfortunate situation.
It's unique with a warranty deed. So let's give a quick hash here. As you're buying a property, you want to buy it with a warranty deed. I know there's a different kind of warranty deed. It's called a special warranty deed or a sheriff's warranty deed.
Yeah, in those cases, typically they are a covenant deed. That's more or less used like if a bank is selling the property. They don't want to really warrant, the back end of it because they didn't own it for the last 20 years.
Correct.
Okay.
So that's why they use
the sheriff's deed.
Yeah, they don't want to say that, hey, we know for 1,000% that this title is good.
But a sheriff's deed wipes out everything prior to the date of the sheriff's sale. Everything's wiped out from the sheriff's deed except for the mortgage. And then after the redemption period is over in Michigan, which they give you up to 6 months, actually up to a year, if you have over 50% equity in the property, and if it's a farmland, if it's an actively farmed over 3 acres of property, that gives you an extra 6 months. You get actually up to 18 months in redemption. That situation there is a little bit different. Okay, from today backwards, everything's gone. It's paid for. Now your title insurance, it's almost a gimme for the bank because nobody can make a claim on a property that's at a sheriff's sale. It's gone.
Yeah, I mean, they make mistakes too.
Yes, correct.
So, sometimes in that process of taking that property back on the sheriff's sale, there's sometimes things aren't done right
they've got improper protocol.
But yes, I mean, as long as the person that lost the home isn't the party redeeming it. I mean, let's say there's a second too.
Right.
The first lender forecloses. There is a second mortgage. If the party that initially lost the home is not the one redeeming it, because they can within 6 months, then that second is wiped out.
Right.
If they redeem it, that second's in place.
It's still in place.
Yeah.
Right.
Correct. So
now, who pays? How do you determine the cost of title insurance and the title policy? They're two separate costs, right? Your title policy and insurance, or no?
No, it's the same.
The same.
It's the same. The title policy is basically we do the title commitment first that lists everything on the property, who the owner is and what liens there are. After it closes and we issue the policy, it's one product.
Okay.
It's just
with 2 stages.
Yeah. First the title commitment, the research, then the closing with all the documents, including the warranty deed transferring.
And the payment for the insurance.
Yeah, and we collect that at closing. Then the policy is issued after closing.
Right, you always get it in the mail.
Yeah,
a couple weeks or so.
Correct.
So who pays for that?
Traditionally, the seller.
Okay, so the seller pays for that. How come we always see another little section on here? The buyer has a mortgage policy, it's called. What is a mortgage policy?
A mortgage policy is for the lender.
That's to insure the lender.
Yeah. So there's a policy that insures the buyer, which is paid for
by the seller.
And then if the buyer's using a mortgage company to get the funds to buy, there's a policy to the lender called the mortgage policy. And the buyer pays for
The
that.
buyer pays for that one. Okay, pretty much clears us up on type of deeds and closings and making sure that you investors out there, whatever you do, most likely and most definitely you're going to want some type of a warranty deed.
Yeah, and I always recommend, a title company. I mean,
Yeah.
I've seen a lot of things that you would not even think could happen. And it
We've seen them
happens.
with over 7,000 transactions in my belt. I have seen
Yeah.
a ton of different things that people could not even imagine.
Do you have one horror story off the top of your head with, title problems, this or that you can talk about, or no? Is it confidential?
Well, it's not that it's confidential. I mean, everything is there's always something in our business. That's why a lot of people think it's boring. Like your insurance, it's
Right.
boring. It's like, no, every deal is different. I mean, you used to have back in, I don't know what year it was, but maybe 10 years ago, when all the market things were going on and appraisals, everything was being overappraised, and there was what they call these straw buyers. So this buyer would come in with the full intent of not being in the home, or staying there basically for 6 months through the redemption period, not make one payment, and everybody's like taking cuts of all the money.
Well, that's what caused. It was one of the big reasons that caused the bubble,
Yeah.
the bubble and the burst, right?
So
It
that's-
was the bad loans.
Yeah, and that was probably the worst I've ever seen.
It got ridiculous, right? Everybody was getting a check of $5,000, $10,000,
Oh yeah, buyers were walking out
$7,000.
with money, and it was like, what's going on? I don't
Go to a closing
I
and you're
don't know.
buying a house and you walk away with money on the buy side. That's weird.
Yeah, that was scary. I mean, the other big thing to look out for or that you see sometimes is there's a lot of quick claim deeds in the chain of title.
Yeah.
And you can't follow it.
So, in terms of your guys' work, you guys could have a quick, simple. The home was owned by the original owner, no liens, no nothing. Your title work is
Perfect.
pretty simple.
Perfect.
Quick.
It's a money grab for you guys.
One
then.
person on is pretty
Yeah.
simple.
Right.
It's the good with the bad, right? It's the easy ones
Yeah.
and the hard ones. Then you have another one where this thing's changed 13 times in 7 years and quick claims. Is it really just, do you charge more for that? Is there an added fee for the amount of time you put into a policy or no?
No, we don't. I mean, it pretty much, it's one fee for the work we do. The only time when there's additional fees, and I know you both are aware of like tax sales.
Yes.
When the county takes back the property due to lack of property taxes
And then
being
you have
paid.
to clear the title. That costs a little bit more money to make sure that all the
Yeah.
encumbrances are taken away.
That's a little unique process in itself to make sure that the process from taking back the property due to lack of taxes being paid, there's a process that has to be followed. So we need to do a little extra work to make sure
so just
that.
like a loan officer or a mortgage company has their underwriter who kind of gives their final review, I want this, and this before I okay this. You guys have the same type of thing, right? There's an underwriter on staff that reviews all the paperwork, all the research that's been done before they go ahead and issue the policy and the deed and everything.
Yeah, we don't have our underwriters like Fidelity.
Okay, so it's like a third
national
party.
wide.
Yeah, you send
You're
it to them.
underwritten.
But we have, attorneys on staff. We have very experienced people, like have been in the business 20, 30 years.
They've seen it before. They've seen
Correct.
an issue.
So their main focus is to check everything and make sure. And we kind of know, like on deals that you and I have done together, they're a little tricky. Maybe there's an underlying mortgage that everybody's saying was paid off, but
Yeah.
there's no
No proof.
release.
Yeah, I think you had to track down some guy in England for me one time.
Yeah, there's a lot of behind the scenes stuff that we do that clears everything up, because the bottom line is we don't want to do the closing and ensure you as a buyer
If it's
that
not
it's all clear
If you're not 100,
if it's not.
if you haven't done your legwork, yeah.
Yeah, because you don't want a $30,000 mortgage that's not yours, but
Exactly.
it's on your property and it's going to cause you a problem in the future. So those are things that we do a lot of extra things for.
We got one more thing we want to talk about as far as title insurance is concerned, but I know it's not a title insurance issue, but it's a 1031 exchange. We spoke about this the last two
weeks ago, yeah.
shows ago regarding buying in a 1031 exchange, exchanging property, and basically swapping properties to a higher property for similar use.
Deferring your capital gains
deferring
tax.
your capital gains taxes. So can you explain a little bit about that? Because I know that at Visionary Title, you guys do 1031 exchanges. You service them. Just give us a quick 2-minute, 5-minute overview.
We do have a company that handles that process. So our attorney handles all the paperwork with that, and we hold that money as well. So basically, the 1031 is a vehicle for you to buy property and sell property without any of that money being touched. So it's not taxed.
Correct.
And you have time limits to do that.
What are the time limits on
I
it?
was just going to say you're going to ask me, and I'm not going to have the proper answer, so I don't want to answer
Is it
that.
roughly 45 days to identify a piece of property?
I think it's 45 days.
Okay, and then about 6 months to close?
Yeah, I mean, don't
That
quote
was the
me
last
on
I had
that.
seen.
I
It was
don't want
45 and
to
180. Yeah, to
misspeak
identify
on
and
that.
close.
I don't handle the 1031s
Right.
to that level.
But
so,
your company does.
Yeah, our company does.
So let's say I've got a guy who wants to sell a property right now. I really do. He's going to sell a shopping center for about $1 million.
Mm-hmm.
Then he's going to take the money because he bought the shopping center 20 years ago on a 1031 exchange when he sold his little building. So he
Okay.
bought this building for $150,000, sold it for $400,000, did a 1031 exchange, rolled that into this shopping center for $750,000. The shopping center paid for itself over time, generates him $20,000 a month in income. Now he wants to sell it for $1 million. He still wants to do another exchange. He's got to exchange it for something more than $1 million and similar type use, which would be like a rental. So he might exchange it for an apartment complex or maybe another bigger shopping center. Once again, deferring all the capital gains taxes that they are. So you guys, do you know what the charge for something like that is?
We charge $750 for that.
Okay.
And that includes, all the paperwork and taking in the money,
And
holding
holding
that
the money.
And then once he identifies the property or when he goes to close on the new property that he's doing the exchange with,
You guys
we
take
will
care of that.
we'll facilitate that as well. So we basically hold that money.
It's all in-house.
And all that paperwork is documented and, to the legal standpoint, where as long as all the, requirements are met and everybody follows the protocol, then
You get your new
It's not
property. You don't pay
taxed.
your taxes. It is taxed, but not yet. Not until you actually cash
Correct.
out and get your money.
correct.
Diana,
Correct.
thank you for
You're
coming
welcome.
in today.
Thank you for
I know
having
it was last
me.
minute. We really appreciate it. But
Anytime.
you're like Kevin said, you're a wealth of knowledge, and you're always our go-to girl when we have a problem.
I appreciate that. I love working with you both.
Super
So
important
thank
part of
you.
the process that doesn't get talked about, and people kind of behind the scenes thing.
Yeah, it's kind of like pushed to the side, but it is huge. You
Yeah.
really do need a title company behind
Finding
you.
finding the property is one thing, selling it's the other, but it's all the paperwork involved, making sure that
Yeah, we do all
everybody's-
of it, all of
Yeah.
it, and take in the money, disperse the money.
We've been a big help to both of us, so we definitely appreciate it. And
Well,
So today
Giving
the
us the
Fed is
knowledge.
meeting. We may have some higher interest rates. What do you
Oh.
think of that?
well, I mean, we're still at an acceptable rate as opposed to what your payment's going to be, as opposed to having to go rent, right? I mean, rental values are going up, as we know. So even with these prices that we feel like are getting higher and higher, and almost, I don't know if it's worth buying that same property as it was a year or two or three
It
ago.
is. Right now, I think, basically what I have here, rental rates, let's go here. Major rental rates. City of Detroit right now, average rental rate is $750. So the monthly change is down 0.3%. In City of Warren, average rental rate, $1,200. The monthly change is up 0.3%. The annual change is up 5%, which is fantastic. Sterling Heights, $1,437, which is down a little bit, 0.1%, and it's actually down 1.4% from last year. Livonia, down 1.5%, but up 3.4% for the year, $1,361. City Dearborn, $1,113 average rate. So rentals are pretty much flat right now. Basically up, down, they're pretty much flat. Single-family rentals. The difference between single-family rentals, they've outpaced apartment rentals. So if you're buying an apartment complex or doing a 1031 exchange back into an apartment complex, the apartment complex is not bringing you the same rate of return that you're getting out of a single-family home.
Yeah, I don't think they ever had. I've never been a big fan. If you're looking just strictly for ROI on
Yeah.
the dollar, the single family homes I've always found are the best, and that's why
It's easier liquidation,
easier
to sell.
liquidation. So, like I said, your return's just a little higher.
But the rents are outpacing those of apartments. Apartments aren't going that much higher, but housing is still going higher.
The multi-unit stuff, usually higher net worth guys buying those on a longer buy and hold.
In-house superintendent or something like that.
Yeah.
You know?
I mean, normally you're right in you're going to try to just ride the equity train on that, have your rents pay it down. You're not getting a lot more of the positive cash flow as you are in the single family homes.
Correct.
You know.
Also, in April, National Home Values, the average cost of a home in the United States today, $215,600. The average Detroit area home value is $151,600. So our area is up about 9%, and the annual rate in the country is up about 8.7%. So, and our negative equity is actually down. We're down to about 10% negative equity in the city now, which is not bad.
Yeah.
You know,
Are you guys slammed with closings right now? I mean,
Yes,
with the
right
market
now
hot.
it's busy, very busy.
Yeah.
Yes.
And then home value forecast for the next year, pretty much simple. I always tell people it's somewhere between 2% and 6%, which is a big variable. But right now, national average is going to be about 4.3% forecasted. Detroit area about 4.2%. So it's not bad. It's a good positive sign. And I don't think unless we get rates that are going to go crazy. I mean, one of the things that's really funny is home values are accelerating at the fastest pace since 2006.
Yeah. Well, it feels like 2006, and doesn't it?
Yeah, but you know what? The funny part about it is at that time, rates for mortgages were over 8%.
Really?
Were they back then?
Wow.
Yes. So the last time the last time that we've had, hold on a second, I got this written down. The last time that the labor market was this strong, as strong as we are now in the Trump economy, the market being this strong, mortgage rates were at above 8%. So I'm sorry, that wasn't 2006. It was probably prior to that. But dude, that's amazing.
Yeah.
So 8%, we were this strong. We're not even at 5% yet. We're like 4 3/4, and everybody's scared. Even I'm looking to buy a house right now.
I know. I don't know what's going to change it. I don't see it changing anytime in the near future, which is weird to say, but
So far, rates have not affected buyers.
Rates haven't. It's the old supply and demand. Jobs are strong.
We have a
Unemployment's
slow supply. What do you see? And you know probably what I know is seeing what's going on out there. I don't see the inventory of good homes staying. They're on the market. They're off the
Oh, my
market.
gosh,
We keep going back to it. Multiple offers on Paul and Sal's show on Live on Real Estate. They just got done talking about it. There's a house, 30 offers. I've had those same things. 30 offers. I just sold one in Macomb Township. 35,000 over asking.
Yeah.
30 offers.
cancel the open house, not necessary.
Yes, but it's exactly what the people are looking for. Today's buyer, once again, is let me go in, turn the key, pay a payment, we're done.
Yeah. Yeah, I don't know what the answer is. I mean, besides building a bunch more homes, ones that are rehabbed, that are move-in ready, that are done right. I mean, they hit the market and they're gone if they're priced right. People are overpaying even a little bit.
And inflation's at a 6-year high.
I mean, it's one of those things where your basic needs, right? Shelter. I mean, you need a place to live.
You gotta have
like
a place
we talked
to live.
about.
Speaking of place to live, though, what's the hottest trend right now in investments? Because that's what we're here for, the investors. What's the hottest trend? Do you know?
Well, a lot of people are shifting to more of the commercial, industrial.
Yes,
rentals.
industrial is huge.
I know a lot of guys that are selling off their single family, residential stuff. And moving into the industrial commercial, 10,000 square foot building with 5 different bays and renting them out to, auto body guys or, glass guys, this, that, and the other.
Well, because the economy's going crazy. It's being stimulated so they can get a maximum out of the homes, go into a market that's still a little flat.
Yeah.
It hasn't increased like the housing has, and I think they're going to sit there and generate a good return on their money. Well, you know what? That's what we got going this week. Diana, thank you for coming on again.
Yeah, if
Thank
anybody
you.
needs any title work, is selling their home, doing a for sale by owner or whatever, call Diana at Visionary Title 586-585-0451. If you got a home you want to sell, list on the market, definitely call Tony and his team at RE/MAX first, 586-773-4400. And if you have a house you just want to sell, liquidate, be done with it, get cash fast in 5 days, give me a call, 586-855-4041.
And he'll give you a good warranty title policy.
I'm going to go through Diana. And Tony will probably be involved too. So
Thank you, guys. We'll see you next week.
See you guys next week.
Thank you.
You've been listening to Fix It and Flip It with Tony Raffin.
Wasn't that
That
bad?
wasn't bad.
Be sure to stop by our Facebook page, like
Thanks
it
for having
and
me.
follow.
We kinda
And
screwed
come
up
back
your
again next
viewer.
week so you can arm yourselves
Wealth
with the
of knowledge.
tools and strategies to become a successful real estate entrepreneur. This is Fix It.
Should I go for a new stream key?